Hello friends, this is CA Yogesh Panchakshari, MD PPI Private Limited. We are talking about the conceptual part or theoretical part of accountancy, and this is the second video of in the same series. This video is totally focused on the concept of accounting standard. So to start with, we should know what exactly accounting standard is. Accounting standard is the standard, or we can say these are the guidelines given for perfect accounting. See, whenever you purchase, let's say a mobile handset, in the box, you will get one manual. What is that manual? This is a guideline given how to operate your mobile phone or cell phone. On the same lines, when the accounting comes in, then there are so many questions we have. And for every question, you can have one new accounting standard. So accounting standard are the guidelines given for perfect accounting to have uniformity all over the world. In India, it is prepared by Accounting Standard Board of ICAI, that is Institute of Chartered Accountants of India, but it is not the property of ICAI. It is prepared on behalf of central government. So for every question, there is new accounting standard. For example, if you ask me how to make the valuation of stock, I will suggest go and check AS2 inventory valuation. If you ask me how to charge depreciation, how to decide whether my asset is fixed asset or not, I'll suggest you to go through AS number 10. If you said we have some foreign exchange transaction, there is a foreign exchange gain or loss due to fluctuation in rates, then how to record it, I will suggest to go to AS 11. So for every accounting question, there is a guideline given called as accounting standard. So let's start with the basic thing of accounting standard. Obviously at foundation level, it is not given in depth. At intermediate level, first part enters in, and at final level, of course, we will go in detail of the same concept. So let's go through the basic part of accounting standard now. So here comes accounting standard. Accounting is the language of business, and to have standardization and consistency and transparency, accounting standards are introduced. Standardization, everything should be same. Consistency, everyone should follow the same accounting principles year by year. And transparency, when you are following AS, obviously everything is properly recorded and transparency is possible. That's why the accounting standards are introduced. What are the advantages? The AS makes the books of accounts comparable. When the two different organizations or variety of organizations are using the same accounting standard, obviously the data is standardized and comparison is possible. To avoid the confusion, if you are confused, go and refer accounting standard, you will get all the answers. Bring standardization in accounting, that is similarity, gives guidelines to the accountants. So these are the advantages, but still there are some limitations. Sometimes different alternatives given by AS create some confusion. Yes. For example, AS2 do not give you a single method. It comes up with LIFO, FIFO, that is inventory valuation, comes with variety of methods. Like AS10 comes up with, that is AS10 is PPE, property, plant and equipment, which include depreciation also. It comes with WDV, SLM, production units method. So multiple options may create some confusion. Third, it may affect the flexibility in accounting and results in rigidity. So there is no flexibility. You have to follow the accounting standards. So maybe there is some rigidity. Clashes between AS and law is obvious because some concepts are different in AS and law. In that case, sometimes AS can't override the statute. That means law will prevail. Accounting standard will have to take a step backward. So with these limitations also, accounting standards are required and they are must for every organization. Now, what are the limitations? Sorry, then what is the situation in India? In India, Accounting Standard Board, ASB of ICAI, has prepared the accounting standard. These are based on international accounting standards. The international accounting standards are applicable all over the world, but which are modified as per the requirement or the conditions of a country. But now IFRS has been introduced, that is International Financial Reporting Standards, and it's a very good try, a very good attempt to make the standardization of accounting standards in all over the world or all the countries. Recently, the accounting standards are proposed to be introduced worldwide and called as IFRS, International Financial Reporting Standard. The list of prevailing S is given and you are expected to mug it up. Simply you have to mug it up. We have no option for it. So these are the guidelines given. We have seen what are the objectives and how it works actually. Accounting standards are the guidelines given for proper accounting and uniformity, similarity, I mean. These are prepared by the Accounting Standard Board of India, ICI, on behalf of government. These are based on international accounting standard. Why introduced? We have already seen, to give guidelines, to have uniformity and to make the data comparable. And we have seen the limitations. Some more limitations are there, like there can be the conflict between AS and law. We have seen then different countries using different accounting standard create a problem. For example, if we have head office in or the holding company in India and a subsidiary in US or vice versa, US follows US GAAP, India follows Indian accounting standard. So the problem starts. But now IFRS will surely solve this. And as we have discussed, it becomes rigid sometimes. Now this is the list given, and I have tried to explain what exactly accounting standard is and why it is introduced. But it is just to create interest of students in accounting standard. Otherwise, just mugging up will not work. So please go through these details also. I'm covering it in each accounting standard in one line here. AS1 disclosure of accounting policy helps us to find out an ideal accounting policy, what accounting methods, which method, which technique I should use. It helps. Second, inventory valuation helps to give guidelines or gives you the guideline for valuation of stock, LIFO, FIFO, SAM, WAM, all this is covered by AS2. Then cash flow statement helps you to prepare your cash flow statement. That is the source of money from where cash came in and where you have expended the cash by direct and indirect method. As for contingencies and events occurring after balance sheet date, if there is any contingent asset or contingent liability, how to deal with it. If any event happens after the balance sheet date, that means after 31st March, if suddenly there is a huge loss by fire, then can you adjust it in the last year or not? Guidelines given by S4, contingencies and events occurring after balance sheet date. Fifth, net profit for the period, how the net profit should be calculated, how ordinary and extraordinary items should be separated, how the prior period items, that means earlier year items, are adjusted in current year. Like you written off bad debts 3 years back, and suddenly that person, your customer, came today and said, okay, I want to pay you the amount. I don't know why, but he's paying. So how to record it? This is to be recorded in current year, but as a prior period item, earlier year's item, that is AS5. AS6 was there depreciation exclusively for depreciation, but now it is merged with AS10. So no AS6 in existence now. AS7 construction contract helps to prepare the accounts for those who are involved in construction contract or long run contract. AS8 is not there in existence, it has been removed. Then AS9 revenue recognition means when to record your income as your income. If someone promised me that, yes, sir, I'm going to join your batch soon, I cannot record it as income because I don't have any legal claim on it. So it is explained by AS9. Revenue means income. Recognition means when to record it in the books of account. AS10 fixed asset is the old name. Now the new name is PPE, property, plant and equipment. And it has been merged with AS6 also. So AS6 has been merged with AS10. So AS10 new name PPE, property, plant and equipment. S11, effect of foreign exchange, effect of changes in foreign exchange rates. If the dollar rate, euro rate goes up and down, then it gives you the benefit sometimes or sometimes exchange loss. How to record? S11 will help. S12 government grants, it helps to record how to, helps to understand how to record the government grant. Maybe sometimes you receive an asset free of cost, or maybe some contribution is made by government for that asset, or some revenue grants are also received. S12. S13 investment accounting here, the accounting standard will help you to record your investments in shares, debentures, its dividend, bonus share, interest, everything. S14 amalgamation of companies, when one company gets amalgamated with another company or one company acquires the other company, how to record. S14. S15 employee benefits, whatever the organization pays to employee, like wages, salary, some perquisites, that is the facilities given, pensions, gratuity, everything, how to record. S15 will help. S16 borrowing cost, when you take a loan against any asset and that asset is under construction, how to deal with the interest of that loan, answered by S16. S17 segment reporting, segment means part, you can say it's a department, product, something. How to find out which segments are important and how to prepare the report to be submitted to top management. S17 will help. S18 related party disclosure, when your related parties are involved in your transaction. For example, when a person pays salary to his wife, or the wife pays salary to the husband for the same business, it is related party. Or when holding company, subsidiary company comes in, it's a related party. How to record it? S18. Leases, when we take an asset on rental basis for long run, it is financial lease, short term, it is operating lease. How to deal with that? S19. S20 earning per share, how to calculate the earning per share for our shareholder is shown in different situations, and how different situation affects EPS shown by S20. S21 consolidated financial statement, that means when the holding company has some subsidiary companies, how to consolidate, how to merge their books of accounts, S number 21. S22 taxes on income, when you pay the tax on your income, when you make the provision, and sometimes you have to pay extra tax, which you will understand at intermediate level how to record taxes on income. S22. S23 investment in associates, if you have 10%, 20% investment in any company, then it is not your subsidiary company, called as associate company. How to make accounting. S24 discontinuing operation, if you are closing down some operation, not your organization, but some operation. Like for example, you are having 3, 5 multiple products and one product is stopped now. How to record it? That is given by AS number 24. AS25 interim financial report, the listed companies, for example, which are listed in share market, needs to prepare the books of account at the end of every quarter. So a mini trading P&L balance sheet is prepared, called as interim financial reporting. How to prepare it? AS26 intangible asset, goodwill, patents, trademarks, these are intangible asset. How to record it? So that, and R&D expense also. Initially R&D expense was AS8, but that is merged with AS number 26. So how to record this? Joint ventures, when your organization enters in a joint venture agreement with someone, how to record it in the books of account, AS27. Impairment of assets, sudden reduction in the value of asset. For example, if there is an accident to a car, suddenly its value comes down. How to record it? AS28, AS29, again contingent assets, liabilities, and provisions. And AS30, 31, 32 comes with accounting for financial instruments like the forward contract, future contracts, and all that. Of course, that is at this moment not understandable, or you are not at that level that you will understand. So these are all accounting standards which are introduced by CA Institute on behalf of government. What you are expected to do is, you are just expected to mug up the names, maybe match the pair, maybe fill in the blanks, maybe sometimes they ask. So if it happens, then you should not lose your marks. So make sure that you will remember all these names, and these are almost 30. So even if you start mugging up 10 every day, within 3 days it can be done. Forget about the explanation, it is just given for the better understanding and creating interest. So this was all about the accounting standards, and here we can end up with this video. I hope, even though it has got so many contents, and I understand that I cannot also continue for the video further. So I understand what will be your position, but I repeat, you have to simply remember the names of accounting standard, and AS10, please replace it with PPE. So take pauses, then go through this video gradually, once, twice, thrice, till the point you understand it properly. You can pause the video, you can mug it up, you can understand it better, and then move forward. Just don't just go it as a video throughout. It's not a movie. You have to understand it properly, right? So if you like it, please press the button of like and give your comments on the video, so that we will be able to come to know how exactly your test is and whether these videos are working for you. And if it is working, obviously we are going to create so many videos for you. So this is a strong base created for accounting, and obviously it will be helpful forever till final and thereafter in your practical life also. Thank you.